Hey, good evening, good afternoon, good morning, wherever you are in the world. This is Eric with Inspired Trading. Hey, today we're going over the 20, 50, and 200-day moving averages. Moving averages is a way that we can track a trend over time. And the moving averages can also serve as support and resistance. So if you remember me talking about support and resistance in the other videos, it also adds as another area of support and resistance. So you see these blue lines on here. These are my support levels, resistance levels, etc. But these lines right here can serve as the same thing. Before we get started, you want to go up here to this symbol. It looks like a FX. It's called Indicators and Strategies. You're on Trading View. You click on that. All right. You just type in 20, and boom, voila, the averages will show up. You can click on that. This is a 20, 50, 200. SMA stands for simple moving average. Once you click on it, you can just exit out and it appear on your screen. All right, we'll keep this real simple. When price is above the 20-day moving average, it suggests that a trend continuation is going up. It's considered a bullish thing. When price is trading below the 20-day or the 50-day, it's considered to be bearish, going down. All right. We're looking at the US dollar, Canadian dollar, and as you can see, that orange line. Oh, before we even get started with that, you can just click on your right click on one of the lines, and you go down to settings. You can change the colors, all right, wherever you want. See, you got that. Just click on it, and you can choose how thick you want the lines. All right, so these are the thickness of the line. All right, so the 20 is the first one, the 50 is the second one, and 200 is the third one. I've given them my colors. All right, so on the chart I know what I'm dealing with. So this orange is the 20-day moving average. Look, let's go back in time. Anytime price touches the 20-day or the 50-day, you're hitting a buy. All right, we're buying it. No questions asked, basically. Buy, look at this, buy, we're buying. Okay, why are we buying? It's signifying that this trend wants to go up. It wants to keep going. Only time we need to become concerned if we're not buyers in the market anymore is when price breaks below here and then this line starts serving as what? Resistance. We have evidence of that right now that's going on the hourly chart. So I'm going to see if I can stretch this out a little bit more so you can see what I'm talking about. Okay, so look what we have right now. We have this going on where that acted as resistance. Why? Look at how many times price came in and touched. So if we would have added sell, 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 and then what? We had a break. Normally, price is supposed to do what? Bounce off the 50, but this time it didn't. It pierced it. So all of this now serves as what? Resistance. Remember, when support is broken, it becomes a new resistance. When resistance is broken, it becomes a new support. Go back and watch that resistance and support video so you can understand that. So right now, if price is closed above the 20-day, it suggests that a trend reversal is basically going to happen. Okay, we got some room to the downside. Remember the same thing over here going up. As long as price is above this 200, the 20-day, we're good. Okay, so here's some hard rules. Remember, when price touch, we're going to buy. All right. When price pierces through and close like it's doing right here, all this in here, all right, we're out. Okay, now we're looking for shorting opportunity to short this or sell it short. All right, so now that we have that out the way, now when price is below 20 or the 50, you have another area that you can focus on, which is the 200-day. All right, price looks like it wants to come down to this 200-day. All right, and when price gets here, what do we have to monitor? Is it gonna bounce? Okay, is it gonna bounce to go back up, or are we gonna pierce this, and keep going on down to the downside? All right, when price the further the 200-day or any of the averages are away from price, the more likely it wants to try to get back there to cover it. Okay, it doesn't like to be away from the averages long. All right. So what we're looking at is something called right here called a narrow state. What it means is you have the 50 days are very close to each other. That's narrow, but look at the channel. It starts to distance. This becomes something called a critical level. Critical levels means that when this thing corrects and come down, it's going to be massive. All right, because this wide. Look how wide. All right. So look, see, as we've been talking, look at that price. It's starting to drop. All right. It may head this. We may get a little bit of correction. We have to clear this zone. Right. See the little wick down right here? That was some form of support. Price came down and got rejected. So we'll go ahead and just put a line right here. All right. Price needs to break that. Once it break this, we got what? Another area of what? Support. Okay. So you just don't just use the moving average thinking it's all peaches and cream. You still got levels that you have to break through. All right. I want you to look at the moving averages, opportunities to enter a trade. All right. When you think of it in that way, it makes your life much easier. Okay. Why? Price gets here. I'm looking to enter and maybe go long. Okay. You better where you going? Look left. That used to be an area. All right. That used to be an area. Price comes down here. I'm gonna look left, and I said that was a resistance area. So guess what? Either price can come down and turn right here, or if it breaks through it, I know if it comes back up, it's gonna go where it remembered, and then it may come down. Right? I know that might sound like, oh man, what is he talking about? The more you get in this, the more you trade, the more you understand. Everything on the chart is basically support and resistance, greed and fear, like I said. All right. So right now, it used to be that this 20-day served as support. Now it's going to serve as resistance. All right. And what we want eventually is we want to distance ourselves to where we're blowing past all of this. And then what? 250 and 20 is above us, which is somewhat good for us if we're shorting this, is because we're riding it down. But guess what? It also provides another opportunity. So eventually when we hit the bottom of our targets, that we could turn around and we could ride it back up, okay, to the moving averages. So here's some hard rules. When price is below the 20 and 50 day, you will only buy. Now this is if you're using stocks. You can do it probably with Forex too, but you're only going to buy if price comes down to the 200 day. All right. So that's mainly for stocks. If it's below the 20 or 50, you're going to buy when it hits the 200. Okay. For us, that's shorting. We're going to ride it to areas of used to be support. All right. If you're a long-term trader and you can handle the swings, which means that this price will come down here and then it can come back up here. And depending on your entry, that may be a little problematic because it can cause drawdown in your account. All right. So we look at these as opportunities to take profit and then find another entry to continue on down to the downside. So once again, prices are below 20, below the 50. We can sort of set our targets to think that it's going to come down to the 200. Okay. When price is above the 20, it suggests the uptrend and it serves as support. If price comes down to the 50, it looks to go back up even. But when it breaks below, that serves as a sign that we're now in the reversal of the bullish territory. Okay. Now, let's go down to the 5-minute chart. Sometimes the 5-minute chart looks totally different than the 1-hour chart. And look at this. All right. We should look. Every candle represents what? 5 minutes. You see this candle right here? It's green. It's indecisive right now. You see it fluctuating back and forth. This is what you call the bulls and the bears that they're tussling right now. That they're indecisive. The bulls winning a little bit, and then the bears come in and win a little bit. So right now the bears are winning. All right, they're winning on this. This price wants to come down, But what do you want to keep your eye on? Look at this. What I tell you, the further prices away, the more it wants to try to eventually come back and hug it and want to kiss. Like they miss each other. All right. This is becoming a wide state. Okay. So we have to be careful that if we're trading this, that we're not adding. You shouldn't be adding anything right now. Okay. I'm gonna show you how you stay safe. You're on a 5-minute chart. Where do we enter? Well, right here. Boom. All right, price came down and then what? It came back and what? Touched 200. Sell. All right, it looked like it was going to come back up again and never did. We're not buying no more. There's no reason to buy. Or in this case, you're selling in Forex. What are you selling for? Look how deep this thing dropping now. All right, so watch this. Look how many pips would be up. There's no reason to do anything right now. You entered your sell right here. Look where price is at right now. You're up 123 pips. See this right here? 123 pips. You got a standard lot size. You just made $1,223. Every candle represents what? 5 minutes. So what is this? Came in right here. All right, here we go. 5, 10, 15, 20, 25, 30, 45, 50, 60, 70, 80, 90, 95, 100, 105, 10, 15, 20, 25, 30, 35, 40. So what is this? Hour? Over an hour? You up $123. I'm sorry, $1,223. Or if you had a dollar lot size, that'd be $123. It's not bad, considering that you look at this video. We're in the middle of one of the biggest economic, crisis that we've seen in America with this coronavirus. All right, so a lot of people getting hurt out there in the markets, but you see right here before you, someone is making money. I'm actually making money on this right now. I have actually a couple of accounts, and this trade is going, so it's doing very well. All right, so once again, the further price is away, the more you can expect the price when it comes back down. All right, just in this situation right here, it's a trend continuation to the downside. We can lock in our profits. Okay, you can add stop losses in at different levels that serve as resistance. So we could put a stop loss right here. We keep trading, and then when it comes back and tests our stop loss, okay, we're out of the trade, but we're in profit. That's great. Okay, so it's one of the ways you could trade this without having defined targets. Okay, these moving averages, it's like a confirmation that, hey, look, we in a trend. Let's ride this trend. When it starts breaking some of the trend rules, then that's when we need to get out. All right. So, like I said, this is on the 5-minute chart, and it's the same trading pair: U.S. dollar, Canadian dollar. Okay. Look at this. It broke what? It broke this area. What's the next area? Price want to come down right here. See that? Right here. All right. And then what happens? When price gets here, it has to make a decision. Are we going to break through, or are we going to bounce and come back up and test this? All right. Look what price did right here. It came down in this area, that bounced, and it came back and test. Like, it can stay in a channel until it breaks out. So guess what? We're not out of this channel yet. This is the biggest channel. Look for right now. Look at this channel. Look at this channel. Look at all this. This is going to be some money right here. Okay? This is going to be some money. If it breaks in here, we can add a position. We try to capitalize off of this. Okay? But this is a channel. But if you want to use hard defined rules, remember one of the rules is you only enter once it hits one of the moving averages, either either on a bearish move or a bullish move. So if you stick with that, stick too hard to find stop losses. Let's look at another trading pair. Let's look at the CAD, Canadian dollar, the Japanese yen. We did pretty good on this one today as well. All right, here we go. Look at this. It's getting away from it. What does that mean? It look like it want to come back down. But here's something beautiful. When it comes down, look like it wants to what? Keep going higher. All right. Now let's look at this. Look what's going on. Look what's happening. Look at price coming up. Look where the moving averages are. Look at this. Remember what we said? We come down, touch, buy. All right, touch, buy. This moving average may continue to come on up, and then what? It touches, and we buy. And then we're gonna have what? This. Be in the making. This over here. Look at that. They're trending up. All right, except this is from a different trading pair. That may play out. When we're gonna buy? When it touches the 20 or even the 200, touches it, that's what we're gonna buy. All right. If it breaks below, we know that now what serves as a level of what? Resistance. If it breaks below this, we know that what? We're waiting for price to either come back up and test to go short or get back up above and continue trending up. All right. These are healthy pullbacks. Sometimes these trading pairs need a break. Almost think of somebody exhausted for running. All right. They need a quick break, breather, and then they get back to it. Okay. So, and look at this little cut. Looks like a little dip curve. All right. It's healthy as well, too. Okay. It's like a curvature. So when it curves, price is what? Hey, it's time to turn around. Let's go. And the moving averages serve it as like a nice area of support. Okay. Most people try to jump in this trade right here. This ain't telling us anything. Nothing. What? Nothing. All right. Yeah, you make it look left and you say, hey, there's some area of support. And that's a possibility. You could use that support. Okay. Look at that. Support. So technically somebody probably is buying right here. All right. But if I see this right here, I know that, hey, look, it may want to pierce that, come in here to touch it. So let's look at the 5-minute chart. Maybe the 5-minute chart tell us something totally different. And it does. The 20-day is above. But you just saw on the hour that the price was above the 20. So guess what? Look, it's red. We're shorting this. Every time it touches, we're shorting. And the price could come down to right here or at minimum right here. Right? Somebody put it as short and it's shortening. Because why? They're using the rules. In 5 minutes, as long as prices are below and it touching, I'm selling. Let's do some measurements again. You bought and you sold right here. Price came all the way down right here. It's 27 pips. $10 lot size. You just made $270 in what? 1, 2, 3, 4, 5, 6 times 5, 30 minutes. You just made $270. And we'll say it 30 minutes. All right. If you're doing a dollar lot size, you make $27 in 30 minutes. Not many people make $27 an hour. You just made it in 30 minutes. Simple rule. What? When price is below and it goes up and the 20 average is above, it shows it's sign of resistance. We hit the sell button. Boom. As soon as it hit. All right. You say, Eric, why I'm gonna do it every time? You don't have to do it every time, but you can scale in if you want to do a small lot size. It don't matter. Stay in it. Add whatever you need to do. Set your stop loss above. So right here, if you enter it in, set your stop loss maybe right here. Okay. You can draw your line and say, hey, my stop loss is going to be above all this right here. So now you protect it. Okay. If you enter, you see it's going to turn green. So it's ranging back and forth. All right. It don't say that the price. See, look, it's about to break above. It could go up here. You don't know. Respect it. Okay. So look what it's trying to do. It's now what? Now if this thing 5-minute chart closes above this, let's move. Let's zoom it in. If it closes above it, where it can now serve as a springboard. But it's having a lot of trouble in this area. All right, this is major resistance. It's having trouble breaking. All right. Now I'm not gonna sit here and watch this for 5 minutes, cause that'd be wasting you guys' time. But I think you get what I'm trying to say to you guys. Look at that support. Boom. Buy. Well, let's see how much that would have been. Buy. 40 pips. Yeah, 40.8. 40. Okay. $400 or $40. You do a 50 cent, just made $20. All right. Simple. All right. Let's say you enter right here, and price does go up to right there, and you got a dollar lot size here to there. You just lost $9 if it hits. Okay, it's fine. You lost $9 if you put your stop loss here and price goes up here. Okay, so right now it's starting to go red. You good now. Okay, but your stop loss is right there, and you can go on about your day. You don't care. All right, that's okay. All right. So you see this on the CAD, and you can go higher time frames as well. All right. So let's look at the daily. The daily chart will look totally different as well. So look what we have on a daily. Don't worry about these arrows. I was doing something else earlier. But look what the moving averages are at. They're all below. But what did we tell you? The price normally want to try to get back here as soon as possible. It's trying to. It want to meet right here. So it's a possibility that, yeah, you could try to get in and ride it back. You would have entered down here. Why would you enter here? Remember, you said, well, Eric, you said just only enter when it touches the 50 days or whatever moving averages. And not necessarily. You also enter at what? Support areas. This was support one time. It came at that, and what? Came at the test support. Okay? Some consider this a double bottom. If you look left right here, the support that suggests that this wants to go up. So over time, the Canadian dollar is going to be pretty strong to get to this point. Okay, but what area do we have to cover? We have to blow. We got to get out of this zone because we right now some resistance. Price having a hard time breaking that. Got rejected. Once it breaks it, we have a great chance for it's coming here. Okay, we can also do a Fibonacci retracement on it to see how much it wants to retrace or it could retrace. That's a better term. All right. Look at that. Look at that video on the Fibonacci so you can understand that. All right. Look at where it's sitting at. It's sitting above the 38%. Okay. Look left. It pierced 38%. Normally when 38 is pierced, I ain't gonna say normally, but sometimes when it's pierced, it suggests that the next level will be hit once it pierces. All right. So this could be a good sign that it's still going to come up here, try to hit more than likely up to this area. Okay. So it's something to look at when it comes to this trading pair. So to recap, to go back over everything, the 50-day, 20-day moving average, 50-day moving average, the 200-day serves as a measurement of a trend and what's how price is reacting to those average levels. All right. Look at this one right here on the daily. Price broke above. It broke above. Right here, it got rejected. All right. You probably made some money. Since this is a daily chart, this is huge. It's a lot of pips right here. I can measure that. Came up, hit. You entered what? Sell. It's 57 pips. Okay. What happened? Pierced it. You enter. Oh, buy. Okay. And that's it. It's riding. It's doing great. Okay. Yes, you can look left. Pick your targets. Look at this left. You enter. Look left. Right here. That would have been our first target. Would have got out. It shot past it. All right. And what did it do? It came back and it tested that area that it broke. Within this trade, you just saw what? 3-wave pullback. So when you start looking at the other videos and you start understanding how all that go together, all right? Look at this strong move. 1. Then we got 2. All right, 2. Look left. Look where it came back to. All right. And then 3. All right. And it did what? It pulled back to what? Pulled back. Look at that area. See? It came back into this area. It's on a daily. But then it did. It rose and went back up. But then it got rejected again and that broke. So you would have entered here and you would be up in profit. But the trend did not continue up. Normally we would set this first leg, this wave, as the next target up. Okay. But like I said, you would have entered here and look what it lines up to. The moving averages. It came down and touched and did what? Bounce. All right. It touched 20-day. He bounced up. Let's measure this move. See how many pips that is. Boom. All the way back up. It's 192 pips. That's $1,920 taking the standard. If you're taking a dollar lot size, 192. If you're taking a $2 lot size, you do 192 times 2. That would be your profit. Okay. The goal is when we do get some losses, just take minimize loss, and then maximize your winners. You'll be fine. Please ask questions if you need to. You can always inbox me, ask me questions. Just remind yourself that when price is below the moving averages, it's going to try to get back to it as soon as possible. Okay, it does not like to be away from it. Look at all this. Okay, look, price was getting it away, and it was like, I want to come back. Hey, how you doing? Hey, how you doing? Hey, how you doing? See, hey, hey, hey. Okay, we're a family. We're all together. Whoa, 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 whoa. Wait, hey, you're leaving us. You're leaving us. You're leaving us. Oh, okay. Thank you. Come back. Same thing. Okay. Look at this. Price. Right. Look at this. Double bottom. It's trying to come up. All right. Well, some people don't call it double bottom. I do. But you call it the twin bottoms, whatever. And that's another thing. You're trading, you come up with any terminology you want. Who cares as long as you're making money. All right.